The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out with the DAX, but before we do that, I have to remind myself of a little story that I heard years ago. It was about pressure. They were talking about John Stumpf coming on to the floor of Congress today, where he's going to be grilled, and the announcer at Bloomberg was saying how much pressure Mr. Stumpf was under, and I really had to giggle because the guy makes more money than God. And if he loses his job, he's going to get a golden parachute somewhere in the neighborhood of around 200 large. So it's really interesting. The story I want to relate to you is it's a golfing story. Back when Lee Trevino won the Masters, when he was a young man, he had to sink a 10-foot birdie putt in order to win the Masters. And when he was being interviewed by Pat Summerall afterwards, he said, "Oh, Lee," he said, "it must have been incredible pressure for you to make that 10-foot putt to win the Masters." And Trevino, in his usual jovial way, laughed and said, "Are you kidding me?" He said, "There was no pressure at all." He said, "If I miss the putt, I make $172,000. He said, "Pressure's when you're a young caddy at the El Paso Country Club and you're paying in a $50 and $100 Nassau, and you've got to make that same putt and you don't have any money in your pocket." He said, "That's pressure." And it's true. This man, he is going to come out of it okay. The people that get hurt, as John Logan said, were the people that had these accounts opened. And the problem is what John mentioned that they don't talk about too often, is the fact that these credit ratings are based on, mortgages and cars and stuff like that. And a few points here and there can amount to thousands and thousands of dollars, over a long period of time. Okay, now that's the end of that. We'll move on until I think they'll have JP Morgan on probably next week, followed by Goldman Sachs. If you ever see Goldman Sachs in front of one of these things, folks, the canary's out of the bag, but I don't think you're going to see that anytime soon. All right, we'll take a look now at the DAX. As you can see, we opened up sharply based on the continuation of what we did yesterday in the stock market. We also had a nice little move in the Hang Seng yesterday after that big reversal that we had a week ago. We did rally up into the 61% retracement, almost nearly spot on at 23,900, I believe, in Hang Seng. And so that is completing what I think is a bearish pattern in that one. So anyway, this is what happened in our market yesterday. We went down and then we rallied up to the exact 78% retracement in the NASDAQ, right to almost to the exact tick at 48.75. The S&P was 21.65. It got to 21.67. So all of those numbers, and the other one that was in there, of course, was the New York Stock Exchange Index. It also got to the 61% retracement. So all of those have been completed, and whether that's related to anything that's going on as far as the hearings, either with Miss Yellen or I don't think the Wells Fargo thing means anything at all, but that's the main thing to look at. Folks, we've got a pattern that is forming right now that if you like patterns, and this is the one that you want to take a look at, because this is Mother God and Country stuff. So hold on as we send this recommendation in to Sister Mary Perpetual at Our Lady of the Orphans home, and you'll notice that we have a head and shoulders pattern in silver forming right now as we speak. Right down here, the low has been 1908. It's perfectly symmetrical. It's right above the 78% retracement at 1910. So it might not work, but if you wanted to buy silver, this would be the spot to maybe take a little nibble at it, because the same thing was true in gold, but gold went a little bit lower. Gold actually made a 3-drive pattern on this particular chart. In other words, if you were looking at the gold chart, instead of stopping at the right shoulder, this went all the way down to make a 1.27 expansion of the head, taking, silver or gold down to that 13.18 level, and we're trading around 13.20 right now. But silver is acting a little bit better, so that's the one that you might want to keep an eye on, and you'll be able to see if that is going to be the case. Okay, now if we take a look, there's a couple others that look really interesting here from a entry standpoint. One of them that we've been trying to emphasize the negativity in it, and that is the euro. We almost last night came up to a perfect 61% retracement. We missed it by about 6 pips in the euro, and since then we backed off about $400 or $500 from that level. So the euro is still in a downtrend. There's doesn't seem to be anything on the upside in its future unless we can get it above that 114 level in the euro. So that's one of the things I think that we should be looking at from a standpoint of what we want to be looking at. Now, we're having some questions in the den this morning about the Treasury bonds. And Treasury bonds, excuse me, one second, please. Treasury bonds have a really interesting pattern that they're dealing with here, is because we've been in a downtrend for some time, and we had one really nice rally up into that 170 level. And what we want to try to do now, and is if I can find the chart, and that is what we want to be looking for. Oh dear, Larry. Well, let me show you the Hang Seng chart because I'm on it right now. So we'll show that one, and then we'll get on to the next one here and see if we can get this done. Okay, all righty. All right, let me see if I can find this. If I can't find this within 10 seconds, I'm just going to switch on to one other chart to look at, and then we can get some of these things, out of the way, and then we'll take a look at it. But right now, it doesn't seem to want to pop up like I would have hoped. Aha! There it is. 10 seconds, we're up, and we found it. Okay, let's take a look here at the bonds. We're okay, Mr. P. Don't worry about it. Okay, here's the T-bonds over the past several months. As you can see, we had the big ABCD pattern that called the top up around 177. We've been in a downtrend for several months, all during July, all during August, middle of September. So we were down 10 weeks, and now we've had a pretty good rally from 164 up to 170. That was just a little above the 382 retracement that came in at 170 even, I believe, and we got to 170.22 was the high that we made in these Treasury bonds, and now we're trading, down about two handles in the bond. So we made some type of probably a corrective move here. If we look at the time frame that we had the rally in July from the 15th into the 27th, this was exactly the same type of time frame that we're looking at in this particular rally between the 20th and the 30th, which is tomorrow in the bond. So this could be just a corrective move, and if we get below 164, that's when the real problem lies. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we've got a question for one of our listeners about the end of the month window dressing. You know, today and tomorrow and the first 2 days of the month are the three most positive days of the any time frame. In other words, the last 2 days of the month and the first 2 days of the month, and that's mainly because of money coming in into these hedge funds, of which we have over 15,000 between hedge funds and mutual funds. Actually, I don't know the answer to that question. The two people that would really be qualified to answer it, of course, would be our leader, Tom O'Brien, and also Basil Chapman, because they have a whole lot of experience with stocks, where my area of mini expertise is in the foreign exchange markets and in the futures markets. Those I know relatively well, but the stocks I really don't do many stocks. I mean, I look at some stocks, of course, from people that ask me questions, but you know, the real money for volatility and for patterns and everything, the easy money, to me, is in the futures market, which includes the stock indices and stuff, and then also in the foreign exchange, which is by far the greatest of those that we can possibly look at. So that's really what I'm watching. So I think if you'd ask Tom O'Brien or Basil Chapman that question, Mr. P, you'll be able to get your answer relatively easily. All right, now I've posted an interesting pattern in here, folks. I mean, we always like to pick up a few shekels as we come into the end of the month. And as you can see, this pattern that we have working now in IBM, if you'll look at this, it's an hourly chart going back over, several weeks. You'll see that we've had these nice little rallies. And if you'll take the time to look at those rallies, you'll be able to see that they have a tremendous some similarity. I mean, they're, time and price and everything else. You'll see the 61% retracements. Those are easy enough. And that's what we have going on in IBM right now at this 158 and change level that we've been rallying from 153. Rallied $5, and this should be it. Should be the end of that rally if, in fact, this cycle is getting ready to turn down. Now, if we get above 161, this would certainly change everything in IBM, but that's what it looks like. From a technical standpoint, you have lower tops, lower bottoms. That's the definition of a downtrend. So that's really all you have to do. Now, I'd like to share something else with you regarding the opening price. We have some folks in the den here that do trade the DAX quite a bit, and I just wanted to share with you what some of the things that they do when they're looking at the German DAX, which opens in the middle of the night for us here in the United States, but it's traded relatively actively, not nearly as much as our currencies or our foreign exchange. Let's try it again. Not nearly as much as our stock indices, but it is still quite heavy. They have really good liquidity in this market. But let's just take a quick look here. This is just basically the opening hour or two. It's basically, this is 2.5 hours into the opening. You'll notice the opening range here. And all they like to do is to take that opening range, which takes them from 115 or 10,527 up to 10,552, and then they multiply that range by 1.618. And as you can see, at the first low of the day, got you to the low of that point, and then it rallied all the way up to the high of the day. And that move was, well over 70 points. 70 points in the German DAX, folks, is $1,500. So it's a lot more than we trade with the E-mini S&P, because the margin on the DAX is actually 22,000 euros per contract. Now you could, if you wanted to, you could have expanded that chart. In other words, go from the low to the high of each particular swing and move it out into the future, and you'll notice that it had many of the same characteristics. In other words, as it was going down, it would come very close to the high end of the rally, and as it went down into new lows, it would be very close to the expansion of the 1.27 or 1.618 on the downside. Maybe tomorrow, if we have a little bit more time, we'll expand this a little bit to show you how you can actually do some of this yourself, because it's a really good, really good spot to take a look at, what these things are. What these things are doing intraday. Now we have reached a minor bottom now in the DAX, and it's starting to bounce, much like we're doing here in the S&P early this morning. So those are just a few of the things that we keep an eye on as we're going through. Looking at these things in the morning, trying to give you a little bit of good information, and that's the primary purpose of what we do here at TFNN. Okay, we got another one here that's very important, folks. We talked about this yesterday. We missed our buy point on this by about 30 cents, and you'll notice here that we did get up above that 46 level that we thought would be a pretty good move, and it did move well over $1.50 a barrel. We didn't quite make a new high, and now we're starting to back off a little bit. And what I've done here is I've drawn in the 38% retracement here of the move that we made over the last several days. In other words, from September 27th, we rallied into yesterday, late afternoon, and now the little pullback that we're getting. If it's really good, we're not going to get any lower than this, 4620 level was where we broke out from. That's a 38% retracement, and it would be very, very close to a 20-man line if we get to that level. What's good about this is if you buy it at that 38 level, you don't have to risk an arm and a leg. I mean, usually 50 pips in the or points, whatever you want to, ticks, whatever you'd like to call it. But by the way, I don't know if you folks know this, it's a little trivia, but pips means percentage in price. That's how foreign exchange, measures the cross rates. And it's nothing more than each value of each tick is what it really is. That's where the home of Forex is, and still is in London. They use the word pip instead of ticks. So that's the only difference, is how it's named. It's the same thing that you're looking at. Okay, but let's watch the crude oil, because it's got a chance That last move that we made, as you can see to the downside, missed the 61% retracement by, like I mentioned before, about 10 cents or pips, whatever you'd like to call it. And that was about $100, and then it had the big run. We had an order to buy it there, but unfortunately it did not get filled, as sometimes is the case, but the market took off. I have a hard time chasing markets, so what I try to do is, like what I'm doing now in the crude oil, is wait for the breakout that we've had, and then I want to watch this pullback that we're getting here to see if this is going to be a pullback into a 38% retracement, because if it holds that level, that tells me that the market is incredibly bullish and we should be able to have a heck of a run. And the price objective on the oil, if we just measured the ABCD format, takes us to $51 per barrel, which is a substantial amount from where we are now. That's equivalent around $4,500, and that would be a pretty interesting move, to the upside. So we want to watch this very, very closely in the oil. I think if it makes a new high now above that 47.50 level, just after an 80-cent correction, that's also telling you that you don't want to be short this one. And we could easily make a big ABCD at 51 dollars per barrel. The same thing is holding true in the not natural gas, but in the gasoline futures and also in the heating oil. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, stay with us, folks. Here, I have to make a couple quick adjustments here because my alerts are going wacko on me here. So on my platform, my trading platform, I just wanted to see. Oh dear, we have to show you this chart here. This, hold on a second. It's a stock that's one of the what do you call these, biotech stocks. It had some problems yesterday, and I just wanted to. That's what's causing all the gyrations here. Oh my goodness, this is certainly. Wow. Let me just give you an example of what's happening here, folks. Wow, everything's beeping here. Hold on just a second here. It'll just take me a second to bring this up so that you can take a look at it. Just to give you an example of what will happen in one of these stocks that doesn't get their approval the way that you'd like to have it. So hold a second here, and then I'll be right with you. And then it's worth looking at anyway because it's had a little bit of a correction today. Here we go. It's called ITCI. I don't know exactly what that means, but all I heard was the fact that it had a really bad review on one of their products, that it was really, it's called ITCI. Here, I'll post it in here so you can take a look at it. As you can see, a few days ago, we were right at a 61% retracement up there at $44, and we just opened at $15 a share, $15.63. That's more than 5%. Anyway, it's this is a really big. In fact, it's almost at an ABCD. If you wanted to, it's got a huge gap. But this would be a stock that I put on my watch list for a buy if you like buying value. But with this huge gap that we've had down like this, something really dramatic is happening with this. They said that the product was basically no better than a placebo. It originally opened at 28, and now it's that was in the overnight session, and now it's trading at 15. Folks, I'm not involved with this stock at all. All I wanted to do was to show you that, we did have a Gartley pattern up here, and it was exactly at the 61% retracement. You had the ABCD. If you look at it closely, you'll see that you also had a 3 drive to a top pattern over the period from July, August, and September. Okay, let's get back to the few things that we do know around here, and that is the Japanese yen. We want to watch this one because it has done exactly what we wanted it to do. Let's get this chart up, and then we'll be able to take a quick look at it here. There we go. You'll see here the dollar yen is, went right down to that 135 pattern. It stopped almost exactly at par. The low was par 08. And now this has not quite been updated yet because we're still going higher this morning. We're almost up to that downsloping line, which is a 78% retracement at 108, 101.80. 101.80 is the 78% retracement in the dollar yen. And so it'll be interesting to see. Let's just double check to see where we are right now. Well, we hit we hit 108.84, and right now we're trading at 64. So we'll watch this one with a little bit of interest too, because this is still in a downtrend, and we'll watch it a little bit more closely as we go. Now, the silver that we looked at, or when the show started, it did hold, the 1908 level per ounce. That would be the right shoulder. Right now, it's acting relatively good. Anything below 1908 now, I would think would not be a good thing to do. So I would make your stop at break even and make sure you just don't lose any money on that trade, because it did exactly what we wanted it to start moving. As far as you've asked several questions about the crude oil, folks, I don't really know. All I know is that the pattern is such that we've broken out to the upside from that $46 a barrel level. And the pullback, if we get a 38% pullback, which is down about 70 cents from where we are right now, would be a good place to take a look at it from the long side, because at that point you have a really good spot to place your stop, because if you're buying it at 38%, the difference between the 38% and the 50% retracement is roughly around $600. So you're able to trade, a contract that is, well over $40,000 for, a paltry $600. And that certainly fits into the ratio of the, 60, of a very low risk. That's the bottom line. Also, I'm going to mention that we're going to have a special guest here in the next week or so. One of my really good buddies who helped me write my first book, Astrocycles, The Trader's Viewpoint, Dr. Steve Shapiro. He's retired now, living the good life back in the Garden State of New Jersey. And he's agreed to come on and talk to us about some things. He's got a really interesting wheat trading program that he uses. It's based on a lunar cycle, and I'll try to get him to share some of this stuff with him. But it'll take me a little while, to get him set up to come on the show. So you'll enjoy seeing Dr. Steve. He used to come by the office in the morning before he taught at Cal Poly University in San Luis Obispo, California, and he would come in and trade with me in the morning from like 7 till 9, and then he would go on to class, and we did this for many years. And then, of course, after he retired, he moved back east to take care of his sainted mother, Mumsy, and now that's what he's doing right now. She's since moved on to the trading sky, but we'll watch this. Oh dear, hold on. For some reason I've got lots of things going on today, as far as things moving on. Hold on a second. I've got to turn some of these beepers off, and that's the main thing that I have to do. Otherwise, I can't walk and chew gum at the same time. Give me 1 second here. It'll only take a second. And then we'll be okay. There we go. 262. Okay, that's good. Just wanted to make sure I got that done. Hold on, I got to turn this off again. Okay, it's tough doing the show early in the morning because that's my most busiest time of the day, is that first hour or two, because that's when most of the things are happening that make the things jump around, and so I have to watch it very, very closely. Okay, stocks are still a tiny bit lower. Nothing really much happening with the markets right now. So the real action is happening more in the foreign exchange, of course, in the dollar yen. We're having some pretty good movement in the British pound, and a very tiny bit movement in the euro. The euro's moved maybe $400 or $500 in one direction, which is equivalent to 18 points in the E-mini S&P. That's why I think that you folks that would like to trade that E-mini S&P ought to really look at the euro and some of these other cross rates, because they give you tremendous volatility and liquidity, far, far more than you get in the futures. I hate to take business away from the futures markets, but from a practical standpoint, those are pretty nice markets to trade. So that's what my feeling is on that. So we'll see. Let's talk about the bonds here for a little bit. We mentioned them a little bit earlier, but we have made some real serious down moves in the bonds over the last 10 weeks. Over the past 3 weeks, we've had a rally, and the rally has been relatively short-lived. We've only rallied about 2.5 points off the bottom. The last time that happened in the bonds, we rallied more than 4.5 points off the bottom. So this is also telling us that the strength of this 3-week rally is not nearly as much as we would have ordinarily expected it to be. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I wanted to give you some information that we received from one of our listeners here at TFNN, Tom Beck. He basically has, and we've seen this in the news before, but he's done a really good job of reviewing, what's going to be happening. But the IMF has decided to take in the renminbi, the Chinese yuan, and that's going to be added on October the 1st. And from that date on, the XDR basket will consist of the following 5 currencies, with the U.S. dollar will go from 53% value of the dollar index to 41.7%, and the euro will go to 31%. The Chinese yuan will be roughly 11%, and the Japanese yen 8%, and the British pound 8%. So we might see some increased volatility in some of these as we see the Chinese renminbi being added to the thing, but that'll be coming in on October 1st over the weekend, so we'll have a better idea of looking at that. I haven't updated the Chinese renminbi chart as of yet, but it's going to be done here over the weekend or so. I'll get the data up and running, so we'll be able to watch and see how this thing is going to wash out, or not wash out, but put it all together. It'll take a few days, I imagine, but there are people that are trading the renminbi already in the foreign exchange market, so it's not going to be too much of a what we call a shock, but it could have some longer term implications now that China is in the IMF in the basket, because it gives them more power, that gives them more votes and stuff. So we'll watch to see how that transpires as we go through looking at the currencies each day. Okay, we want to thank Tom Beck for that. All right, the next one we wanted to look at was the banking index. We talked about this before. We went up and we made this 61% retracement over the past few days, we've started to back off from that. Partly that is due to the problems that Wells Fargo is having, but also we've had some, a little bit of selling in Goldman Sachs and also in JP Morgan. Heaven help us if we ever get JP Morgan and Goldman Sachs on the carpet, like the Congress is doing with Wells Fargo. I mean, this is the problem, folks, is Wells Fargo is talking about hundreds of millions, and you'll notice that the number for the JP Morgan, over a period of 5 years, they paid $40 billion in fines. This is just really, really unbelievable. So that's it. Someone's asked a question about, this thing that's on the internet all the time that Harry Dent is always talking about the devaluation of the currencies and stuff like that. Folks, I think that would be a major outlier event if they were to do that, because that just basically, shakes up the foreign exchange markets. And if you think the stock markets will cause problems, if you shake up foreign exchange, you shake up the world. And that's very, 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 very dangerous if that happens. I don't see any signs of that right now. As you remember, when Brexit was going on, we were feeling very strongly that Brexit was going to be proved. In other words, the UK was going to leave, and it would be negative to the British pound, and it certainly did that. We went from 150 to 138 in a matter of a couple hours. So that's it. The other question that someone's asking in the Dan is about Jim Rickards. He's a former CIA analyst, or I don't know exactly what his job is. He's very, very articulate, and he's talking about this for many, many months or years, along with Harry Dent, about this coming, devaluation and something like that. But I don't know. I do believe we're moving towards electronic money. You can see that more and more often. You go into a Starbucks and people are paying for their credit cards, for $2 or $1.78. I mean, no one, carries cash anymore except the old timers, and they're probably going to take that out of the system too to make everything electronic. Because if they have us phones, they know exactly where we are with our telephones and our computers. All they need to do now is to, control where we're shopping and what we're doing. And then we have the old problem. The old government's going to be taking total control over us, but we'll have to wait and see if that happens. Maybe what was that guy's name? The Clockwork Orange or 2084. What was that? I can't remember the thing. No, Marshall. They're not gonna get the Second Amendment stuff. Nope, that's not gonna happen. I don't know if you know this, but we were only attacked. Our country was attacked once during World War II in California, right off the coast of Santa Barbara, California. A German submarine came out of the water and fired several rounds into the neighborhoods right above Santa Barbara, and it hit a restaurant. And the restaurant, of course, was basically destroyed. Yeah, it was Clockwork Orange. That's right. Yeah, and but this restaurant was destroyed, and they rebuilt it with the burning embers. And the name of the restaurant was the Embers, and it's still there. But that was the only time we were ever attacked. And when they asked the Japanese premier after the war was over why they never really tried to attack, the United States on their own soil, and he said, "Are you kidding?" He said, "Every United States citizen has 1 or 2 guns." He said, "That's the equivalent of 100 times our army." So just the fact that we have all these guns is a good sign that we are able to protect ourselves. And remember that the arrival time of a police car to come to your house is roughly 21 minutes or longer, and the waiting time for a Smith & Wesson is 3,600 feet per second. So those are important statistics to keep in mind as we enter this period of more violence as we go through, each day. And there's somebody always getting whacked now. It seems the normal thing to do. This has got to stop. I don't know how we're going to get it to stop, but we certainly need to do something a little bit different than what we're doing. What we're doing right now. Let me get off my soapbox and get on to these markets here, because we've only got a few more minutes till the break, and then from there we have our good friend Tom O'Brien coming on with his state-of-the-art tech person Tommy, and I think that'll always be a good thing to look at. Someone's asked a question if I'm giving a buy recommendation on that ITCI. All I was doing, folks, one of our listeners, in fact, two listeners, emailed me and asked me to take a look at the stock, and all I could see is that it was in a sell zone for sure, but you don't know that there's going to be an announcement like that. Now, what someone would like to do is to look at the put buying, and if there was a whole lot of puts being bought over the last few weeks, those are the people that you ought to look at, because that's insider trading. They knew something like that was going to happen. Now, I don't think that stuff ever happens, but that's what they're saying anyway. So keep in mind that that's what we're watching here as we start out the day here in these markets, and we will have some pretty good. We rallied about 7 or 8 points in the S&P. We're down a little bit in some of the other things. We've got the Dow is down very, very slightly. It's down 10 points. The S&P is down 2. The Nasdaq is down 6. Very, very little is happening. Silver's had moved about 10.50. Well, silver's moved 10 cents off of that head and shoulders pattern. So you at the very worst, what you should do now is have your stop at 1908, so that you're in a risk-free trade. That would be the best way to handle that. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the S&P on a long-term weekly basis going back over the last 18 months. As you can see, over the past 9 months, we basically have completed the 1, 2, 3, 4, 5 expanding triangle pattern, also known as a reverse point wave. That was also an exact 1.27 from the high of 2015, and also a 1.27 from the high in late 2015. So the double highs that we made both measured to the 1.27 level. Now we've backed off a little, of course, and then we've had the little rally back. We're still basically, I believe, about unchanged on the week. And we're all coming in. Tomorrow is going to be the last day of the month on a Friday. As I mentioned when we started the show, the most positive days of the month on a statistical basis coming from Yale Hirsch's Stock Market Almanac. The last 2 days of the month and the first 2 days of the month are usually the most positive days of the month on a statistical basis. Whether that's due to window dressing, I think that it would be, remains to be seen. But this is a question that should be asked to Tom O'Brien or Basil Chapman. Both of those gentlemen really understand stocks far, far better than I do. I know a little bit about foreign exchange and futures, but the stocks things are the things that they specialize in, and they would know that. It makes sense that that's what would happen because, you know, people bring in their money and they're not going to let it sit there, so they put it to work and they buy at any particular time. We have a new moon coming in tomorrow. And so that will be an interesting phenomenon because, based on Tom Pelk's work from Nomura Securities, that a new moon is usually a buy day in the stock market on a statistical basis. So we have a couple of positive things to see. So if we're down a little bit, we want to be looking for a possibility here, for a market can turn. Remember, these are all probabilities because they can certainly, do exactly the opposite of what you expect. That's why you've got to be able to, find a pattern that you like to see, whether it's a 1, 3, 5 or whatever. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.